With earnings season in full swing and our three largest positions within our portfolio just reporting earnings, now is the best time for me to make this video, which is going to be jumping in depth within HIM's, Oscar, and Zeta's earnings. We're going to take a look at how they performed in quarter two of 2025 and so far in all of 2025. We're also going to take a look at their guidance moving forward, see where this revenue is coming from and where it's going to go, see where this income is going to be reinvested within the company, and even see when this income is going to start coming in for some of these younger companies. Now, in today's video, like I said, we're going to be talking about HIMS, Oscar, and Zeta. And guys, I did get dressed up for this video, so I would love if you guys could drop a like down below and maybe even leave a comment letting me know how I look right now in this nice collared shirt. Now, I'm not going to drag this on any longer. Let's go ahead and jump into this video and talk about HIMS, Oscar, and Zeta's amazing earnings this quarter. Really quickly, before we get into this video, guys, it is last call for our course. Our course is going to be going live on Sunday, and we plan to cover everything from option trading to penny stock trading to market psychology to long-term trading to trade plans, etc. I have so much planned for this course, so make sure that you guys do not miss out on this. Click our first link in the bio down below, join up on that free Discord, and send course in the free chat, and I'll make sure to get you guys that information. Once again, join up now because we are going to be starting this course on Sunday. Now, I first want to jump into each company's quarter two 2025 earnings, take a look at how they performed during this quarter and how that is going to help their guidance and forecasting moving forward. And then we'll move over and talk about that guidance and forecasting, talking about what could be coming at the end of 2025, what the full year of 2025 will look like, and for the years to come. Now, we are going to start with HIMS here, which has amazing growth numbers. While they did double miss on earnings by around 1% on both revenue and EPS, the company is posting amazing year-over-year growth numbers, and you guys can see that right here. Revenue is up 73% year over year. Subscribers are up 31% year over year. ARPU, basically how much users are spending per month, that's up to $74 a month, which is absolutely insane. And their EBITDA is up 109%. That is absolutely insane to see from a growth company, and that is exactly what you want to be looking at when evaluating your company's worth. Now, guidance going to be up another 42% to 47% on revenue, almost hitting $600 million in quarter three. Same with EBITDA, up around 56 to 63%. Absolutely amazing. You guys can see key drivers for this company are going to be their amazing marketing. Their online growth is growing like wildfire, and this thing is not slowing down. Now, the only risk with this company is going to be their GLP-1 regulations, stuff like Novo, the stuff that they have going on, but we have talked about that plenty of times. I do think that this company is going to overcome it, and they have obviously shown that they're going to do that. They have had these allegations out for over 2 years now, and since then, HIMS has been up over 400%. So I am not going to lose sleep over something like that, but it is definitely something to keep your eye on. Now, secondly, we have Oscar, which reported earnings earlier this morning, and it had another great quarter while double missing as well. Now, once again, double missing in a quarter does not really mean much. It can if their guidance moving forward is weak or if something happened during the quarter. But right here with Oscar, we still post amazing year over year growth numbers with revenue up 30%, membership up 30%, and a negative loss margin that is slowly closing this gap while down this quarter, still up year over year. Same with guidance, targeting around 12 to 12.2 billion dollars, which is actually up from estimates of around 11 billion dollars. So a very nice increase right there. Now, one thing to focus on is their ACA subsidizing, which could see a drawback from the big beautiful bill. But like I've said in videos prior, the Ichira plan that they have is going to revitalize this whole entire business, honestly, and take it from 21 million to 96 million customers, increasing that by around 75 million customers in just about 5 years. Now, these, of course, are projections and they will 100% have to operate well. But with the CEO's amazing reputation, I do believe that this is possible. And I do believe that Oscar is going to flourish with their Ichira plan. Lastly, we have Zeta, which actually had the most impressive earnings out of the big three. This stock double beat on earnings and was up over 25% today following their report. Now, you guys can see with year over year growth numbers and revenue being plus 35% and adjusted EBITDA being plus 53%, you can see that this company is growing at an insane rate. Also, taking a look at their guidance and seeing that full year revenue is looking for 1.258 billion to 1.268 billion, up 25% year over year is absolutely amazing. Seeing a company bring in 25% more revenue than the year prior is amazing, especially when this company is looking to begin to accelerate in the next few years. Like I said, begin to accelerate. This isn't even them accelerating yet. Also, looking at their free cash flow being up 52 to 56% year over year is absolutely amazing. And you guys can see their key drivers are growth in AI markets and tech products. These fintech stocks have been absolutely killing it lately, and I do expect these markets to get a lot hotter very soon. You guys can see they also announced a $200 million stock buyback. Their institutional ownership is amazing, and hedge funds and owners and insiders believe in this stock very, very much. They have over 70% of the shares in the market. Now, Zeta, of course, does come with some risk, and those risks are going to be market competition and AI data marketing. Now, there is a lot of companies out there that do a lot of the similar things, but Zeta is actually making a better profit on a lot of these services, and they're getting out to more customers, getting their software out to more people. Now, this is going to, in return, obviously bring in more revenue and income for this company, and this company is going to flourish for years to come. Now, let's go ahead and jump onto the chart and take a look at how these stocks performed following earnings. Now, first taking a look at HIMS here, the stock was down 20% following their earnings, but like I said, I am not worried in the slightest. I'm actually looking for a great buying opportunity which could present itself very, very soon. Now, I'm looking to add more shares in this golden zone from this range of around $45 to $40. Anything within there, I would be very, very happy to add, and anything below, I would be even more happy to add this stock. Now, you guys can see I have a little bit of a projection drawn out right here. I think that we are getting ready for their expansion stage of their stock, where the stock does absolutely just rip away from even their fair value. I think that this stock could see even $200 by the end of next year if this is to happen. Once again, if this is to happen. But nonetheless, my fair value is still sitting at around $125. And I do expect this to get hit by probably February of 2026. I think this stock is getting ready for a massive rip. And while it doesn't look amazing right now, I do believe that the stock is going to move up very soon. And I believe that it will be very, very aggressive. Now you guys can see when this stock does base, it doesn't base for long. So now taking a look and seeing that we are kind of consolidating in this range, I'm starting to think that this is going to become a base for a larger move higher. Now, when this stock does continue to consolidate, that does mean that there is a larger move to come. And with revenue growing over 73% year over year, I do not think that that is going to be a move to the downside. Rather, I do think that this is going to be an explosive move to the upside. And with my target sitting at around a $106 price range for wave 3 and 105 or $150 roughly for a wave 5 target. Now, that is going to be up around 107% to our wave 3 target right now, and all the way up around 200% for our top wave target if we are to get there by February of 2026. Now, my fair value for the stock is sitting at around $126, which is up around 145% from prices today. Now, my entry is down at $35. What I'm looking at right now is going to be a 256% increase all the way up to around $126. Now, guys, I have 325 shares right now, and I'm looking to add another 75 shares if we are to get down into this golden zone. If I can do that, guys, that is going to be an amazing return. You guys can just go ahead and multiply 400 by 126. As you guys can tell, I've done that math, and it is absolutely insane to see. I'm very excited to see this position climb back to all-time highs and beyond. And once again, I do believe that this consolidation is going to lead to a strong, strong move higher. Now, I also do want to show you guys a little bit of a funny fact. I was taking a look at this stock earlier, and I realized that there is a very, very simple strategy. You just buy, and you only buy when the month is red. If you take a look here, they have never had two losing months in a row since flipping profitable. Since flipping profitable is a very important stat. Now, you guys can see red month, then straight green for 3 months, red month, then straight green for 3 months, red month, then an absolute insane candle right here. This candle just blew up around 220%. Absolutely insane to see right there. But once again, red candle, then two massive green candles, red candle, then a bullish engulfing massive green candle. I'm going to bet on this stock until the day I die, and I believe that this stock is looking amazing right now. A lot of people have missed out on this stock, and I think this is the perfect time to actually get some ads. Now, let's go ahead and move on to our second stock, which is going to be Oscar Health. Taking a look at Oscar Health here, you guys can see that we're in this beautiful wedge formation, actually breaking out of this wedge right now. Now, this is exactly where I expected this bounce to come in, and it looks like we are getting that currently. Now, if we are to go up and target our gap, which is up 42% just to target this gap right here, that is going to be an indicator to me that this move could finally be starting. Now, the final indicator for me is going to be over $23.84. Once we do break that, we will be off to the races. And when I tell you guys races, we are going to go to the moon. This stock is going to absolutely rally, and people are going to FOMO into the stock because the financials are just insane. You can't pass up these financials at this valuation. You can't do it. You cannot do it. If you have any money, you should be putting it into Oscar. This is the best risk to reward on the market right now. We first need to target this gap from around $19 to $20. From there, we must break around 23.84. That is one of the more important levels on this chart. Once we do break that, we will be starting our third wave macro move, and that is when people will begin to FOMO into this stock, taking it all the way up to around $45, where that is going to leave us up around 208% from entry. And then even further up to around $65, up around 335% from prices today sitting around $14.34. Now, this does seem like a far-fetched picture, but when you guys do take a look at their financials, they are absolutely killer. And if ACA subsidizing is to get extended, oh my God, we may see $45 to $65 within the next year. If not, we will see something closer to about a 2-year price projection for these final waves. Lastly, taking a look at Zeta, which is up over 30% today following their killer earnings. You guys can see that the price is currently sitting at around $20.23, and we were just about to break out of this amazing wedge. And then earnings reported, and it was absolutely explosive. Like I said, being up 30%, you guys can see this wedge right here led to this amazing breakout, and much of the same with this macro wedge, which will lead to a long-term breakout that we are going to see unravel over the next 24 months. Now you guys can see that our first target is going to be for this third wave move up around 108% to prices at around $30.23. Now I do expect to top out for the end of this year at around $23 to $28. Now that is going to be a range for me where I think you guys will take a good bit of trims. I will be taking a good bit of trims, but for the long term, following the financials of this company is something that I really, really like. I like their market looking forward, and I expect them to move higher for the long term. And so I will be holding most of my shares and even buying back a lot of shares on our fourth wave move right here down to around $24 to $21. And from there, we'll move up to around our wave 5 move at $45, taking us up 215% from our original entry at around $14.65. Now, lastly, I have a price target for around 2032 to 2035, and that is going to be up 313% up to around $60 a share. Now, from prices today at around $20 and entry prices being at around $15, that will be about a 313% increase, because I believe that this company could see something north of around $10 to $15 billion in market cap in the future, and currently sitting at around $5 billion in market cap with great financials. I definitely think that this is achievable. Now, the company is looking great moving forward, and I do expect them to move higher. All right, guys, let's go ahead and wrap this up by taking a look at these positions and how they have been performing. Now, you guys can see HIMS here. I have around 325 shares at an average price of around $35.21. I'm still up around 50% on this position, and my average price has actually been brought up a little bit because I have gone ahead and bought some more shares. But like I said, I'm still up around $5,500, so I'm very happy with that. And I do expect this position to see north of $10,000 in total gains again. Now, today we were down 6%, around $1,200, but like I said, I am not too worried about that when thinking about the long term. Also, taking a look at Oscar here, we have around 900 shares in our taxable, and then also we have around 300 shares in our Roth IRA. And in total, we're down around $1,500 or around 7%. But like I said, we're looking at the long term. This is the only red position within my portfolio, and the wins knock out the losses. So I'm totally fine holding Oscar right now, and even seeing a great day right now, being up around $400 or around 3%. Now, lastly, let's take a look at Zeta, where I have around 700 shares in my taxable and 100 shares in my Roth IRA. Now, that is going to leave me up around $3,000 today on this one single stock. Now, I saw about a 26% gain today, and in total, about a 33% gain, up around $3,533. Now, factoring in the Roth IRA, that brings in another $400. So we have seen about a $4,000 increase in total profit and loss with Zeta in just about the last 3 days. That is absolutely insane to see, and I'm excited to see the stock continue to grow. But for now, I'm going to leave you guys with that. That was HIMS, Zeta, and Oscar's earning reports. I believe that all of these stocks had great earnings. While we did see some misses, I do think that the long-term plan is still there, and the guidance moving forward has stayed strong. Now, let me know what you guys think about these three stocks down in the comments down below. And additionally, make sure you guys do check out our trading course, which is coming up this Sunday, August 10th. If you guys are interested, to either leave a comment, email me in our description, or join our free Discord where you guys can DM me over there. Now, please make sure that you guys check this out. It is very important that you guys continue to learn and invest in yourself and your future as an investor. So once again, make sure you guys do check that out, leave a like, and I'll see you guys in the next video.